Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and I wanted to start by showing you this tweet that I liked this morning. These are the kind of tweets that make you feel good on a Monday morning from Crypto Bull. It still wouldn't surprise me if XRP would climb to $5.96 within the next 5 to 6 weeks. He's using his little charts, which I don't know anything about, but I like to see these tweets every once in a while. I feel like with this SEC thing, anything can happen at any moment, and I like these kind of tweets. It makes me, it keeps me optimistic. It's one of the many things that keeps me optimistic every day. I like it. Okay, now this is a joke. Okay, this guy, I showed you the article yesterday. This guy, his name is Jay Bisnoff. I'll show you who he is. Jason Bisnoff. He's a staff writer, wealth management at Forbes. He wrote this entire Forbes article yesterday about Jay Clayton's tenure at the SEC and what he's doing now, and did not even mention the Ripple case. Did not even mention the Ripple case or the things that Jay Clayton did to give, quote, clarity to Bitcoin and Ethereum and not give clarity to other things, or what Jay Clayton's doing now and how that company's tied into Ethereum, and all the different things that we've talked about here. So I decided to ask him, so Jason, you just wrote an entire article on Jay Clayton and his time at the SEC and completely skipped over his being at the very center of the financial story of the century. What in the world is going on at Forbes Crypto Forbes? And I even gave him a video just to let him know if he doesn't know.
ICOs are speculative, and speculation drives innovation. So they're very important in creating foundational infrastructure.
Without registering with us. And folks somehow got comfortable that this was new and it was okay and it was not a security.
You're about to find out how they got comfortable.
Some other way to raise money. Well, I disagree with them.
So it is not new, it is new, but it is not okay, and it is not another way to raise money.
Correct.
I am understanding you to say it is a violation of the law.
Yes.
Registration really matters. When companies don't register their tokens as securities, they can hide information, and the SEC does not have the information it needs to monitor this market.
I'm perfectly happy for these people to do private placements, but do them right. Don't try and do it as a private placement, but get all the benefits of a public
and then lever over into a public
do all the other shenanigans.
Well, good. So should I take today as you're sounding a warning bell for people? Maybe they better pay a little closer attention to the law, or the SEC is going to pay closer attention to them?
Yes, and it's not the first time, but I really appreciate the opportunity to do it today.
Okay, so I'll talk a bit about the funding model. So we will have a fundraiser for 2 months starting February 1st. It will be available at funds.ethereum.org. So the initial issuance will be 1,000 Ether for 1 Bitcoin, or up to 2,000 Ether for 1 Bitcoin if you get it our way to compensate for the increased risk. So the issuance model is that we will fundraise. Suppose that we hand out X Ethers with a fundraiser, then there will be about 0.5x will be pre-mined, and then 0.4x after that will be mined per year first.
Now, when I watched, when I saw this article and I saw this guy completely not even mention the elephant in the room, for some reason there was only one thing that popped in my mind, and it is this scene from one of my favorite movies, Sin of a Woman, where the character played by Al Pacino says, "What a sham." And you know, this is not one time I've seen this. This is thousands of times that we've now had to witness this atrocity that is the mainstream media, not just in financial media, but in just the media in general. People, you ought to tweet to this guy. It's not like he's stupid. He knows, and I'm sure he's doing what he's told. But listen, this is not financial news. When you're avoiding an elephant the size of Jay Clayton in the room, it is not. and it makes me sick for my children's future when I see this kind of stuff. CoinDesk. The draft infrastructure bill introduced to the United States Senate narrows the definition of broker for crypto information reporting rules, but stops short of specifying that only parties that conduct transfers for customers qualify. Okay, so there's been a lot of different talk about this infrastructure bill. This guy, who's an attorney, weighed in on it. He's talking about how a part of it would they would have to give have IRS reporting requirements, and that people would have to give Form 1099s to their customers and file them with the IRS too. But then he goes on, he says, as those who understand crypto already know, users are pseudonymous and access is permissionless. It's literally impossible for non-custodial actors like miners to get the information they need to do Form 1099s. In practice, this could mean a de facto ban on mining in the United States. That is a big deal right there. But if you've watched this channel, you know that proof of work doesn't work. And I have a sneaking suspicion that in one way or another, and I've talked about it for a long time, that they were going to figure out a way to regulate the proof of work digital assets either out of existence or into submission one. I've always thought maybe it was going to be carbon taxes, but this is another potential. Now, Jeremy Hogan had commented on the SEC lawsuit, and he had put out this video, and his wife, and I'm going to show you a clip from that in a second, but this guy was saying insiders are buying before the settlement would be public. Don't miss it. You know how this will end. And he said there will absolutely be a flurry of buying if there's a settlement. You can't keep that news in-house. And I think that's what you will see. Before there is a settlement, we will see it start to happen. Now, this is Jeremy Hogan's wife. Her name is Thien Vu Hogan, and she did an excellent summary of what she thinks how the bill that's going through Congress would apply to XRP and to Ripple and the SEC lawsuit. Listen to this. And the ending reminded me of this Brad Garlinghouse tweet down here. I'll read that afterwards.
Under this law, XRP, especially the current form of XRP, is not a digital asset security. So in that case, the new law helps Ripple, and therefore it will very likely be applied retroactively. This is especially true because, as you can see, the legislation is very smart that it only changes the definition of what a security is in the crypto space. The law doesn't change any of the reporting or registration requirements for securities in any way, and that is consistent with retroactive application, because you are not changing substantive obligations, but only definitions. So our conclusion from applying this pending law to this SEC versus Ripple case is that the courts would likely apply the new law retroactively. Certainly the last few years of Ripple's business practices, XRP would be defined as just a digital asset and not a digital asset security, and therefore not subject to SEC regulation. This would mean that XRP is a digital asset and subject to regulation by the Commodity Trading Commission and not the SEC. And large parts of the SEC lawsuit would actually become moot.
This thing is beginning to look more and more like a turf war between the SEC, Congress, and the Commodities Exchange Commission than ever before. Look at this. This is a Brad Garlinghouse tweet from back on October 12th, 2020, right before he gets sued by Jay Clayton. To make matters worse, some U.S. regulators have already made decisions that actively favor Chinese technologies over U.S. companies. Legislation like the DCEA can bring U.S. companies to equal footing. So what's interesting is you've got these decisions are actively favoring Chinese technologies over U.S. companies. Legislation like this can bring U.S. companies on an equal footing. So he wants this Digital Currency Exchange Act. That's what he was talking about there. So, which reminds me of another thing I forgot to show you, back to my Forbes thing, the Forbes article. If you go down in the comments here, somebody had asked me a question and I had shown them this. They asked this question and I said, oh yeah, well, as a matter of fact, here you go. I'll just let you read that. Here's a brief moment of silence. I'm sure you guys are fast readers. All right, so back to this. So you can see it's very clearly there's a war going on for how this thing comes out. Now, this was Brad Garlinghouse on Fox News talking about that same Digital Commodity Exchange Act.
Momentum around this on Capitol Hill. Actually, just recently, there's a new framework introduced. It's called the Digital Commodity Exchange Act that was introduced in Congress in, I believe, the Ag Committee, and there's bipartisan support.
Then he got phased out. I remember that. Okay, I wanted to show you this. This thing, I saw a clip of this going around last week, but I couldn't figure out where it was coming from. Turns out it was a recent interview that Brad Garlinghouse did, and I didn't cover it because I didn't know if it was some old thing I'd just never seen. Watch this clip.
So, Brad, let's dive right in. You're being sued by the SEC right now. They are claiming that XRP, which is a cryptocurrency that has a lot of relationships with Ripple, the company that you're in charge of, they're claiming that it's a security and that Ripple has been selling it illegally to investors by not registering it first. Catch us up. What is the state of the lawsuit right now? And, how long is this going to drag out? What does it mean for Ripple investors and XRP investors?
So, Bob, good to see you. Good to be here. And I think one of the key things you said in your question is you said XRP is a cryptocurrency. And I think, there have been a whole bunch of things that have happened in the history. In the Obama administration, the Treasury Department refers to XRP as a currency. I think that Mary Jo White, who is a former chair of the SEC, came out and very publicly said that the SEC is dead wrong on this point. But I think as the court case progresses, what we'll find is that the SEC is wrong on the facts, they're wrong on the law. But I do think it's an important question because, to be a little bit cheeky, I think there really are ripple effects from the SEC's lawsuit against Ripple and against myself and against Chris Larsen. And when the lawsuit was first filed, which I remind people was, almost the day before Christmas and the day before Jay Clayton, as the chair of the SEC, left office, that literally right then I tweeted out kind of, this is an attack on crypto at large. And you may know last week, Jay Clayton was interviewed on CNBC and started talking about the need for Bitcoin regulation. And it's clear that the SEC under Jay Clayton took a very anti-crypto point of view, which I don't think is good for the whole industry, particularly for those actors who have, I think, sought to work with regulators constructively and transparently.
Okay. That was a pretty interesting clip there. Now, I wanted to show you this. You're starting to see this ISO 222 hitting the mainstream here. This is Zero Hedge, aka ISO 222. Yes, digital currencies are almost here and just in time for the next crisis. And when I look at this timeline, it shows SWIFT and all that, but you'll remember Ripple was tweeting this out. Learn more about ISO 222. This is back in June 2020. A universal standard for payment protocols that's enabling global interoperability. You got the shipping containers that Chris Larsen has been talking about since way back in 2015 or 16. Okay, it says Ripple's a part of the ISO 200 Registration Management Group standards body and first member focused on distributed ledger technology. So when you look back at this, and you can see that their timeline is 2019 to 2025. They're going live, a lot of it in 2021. And it always takes me back to, you remember the Everest document? It always takes you back. So it's that same timeline, the 2020, 2025. So Ripple becomes the standard in this year. And then we're dealing with blockchain solutions for capital markets and trade finance. Think shipping containers, R3 Corda, DAH, Fabric, etc. ILP Java becomes the interoperability standard for Hyperledger Foundation projects. And then moving on into 2025 to 2030, blockchains and distributed ledger solutions mature and all asset exchange networks become interoperable with ILP. I'm the digital asset. Oh, by the way, before I say that, I want to something I saw yesterday, and I think it's still going on. I'm going to put this at the top of the description of this video. If you are like the Ledger Nano S's or Ledger X, they're doing a sale right now, 30% off, and you can follow my link to go get it. 30% off sale. I'm going to put it at the top of the description of this video, and I don't think it lasts much longer, but 30% off you can get Ledger Nano S's. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button. Tell your friends and family that there's a 30% off Ledger Nano S sale. And for those of you that don't know what that is, that's a hard wallet where you can control your keys to your digital assets.